talk about balance sheet is a statement. It is a statement which shows you the financial position of your assets and liabilities. Now we will be coming to the fifth unit of this, and the fifth unit is your cash flow statement. Fifth unit is cash flow statement. Now, when we prepare balance sheet, in the balance sheet, the position of cash is already there in the current asset side. That what is the cash balance at the end of a particular period. But through balance sheet, we cannot identify that what is the flow of cash during a particular period. If you want to understand the flow of cash in the form of inflow and outflow, inflow will be from the sources and outflow is known as the application. So what are the sources from which you have received cash in the organization, and what are the sources through which cash has been routed out from the organization? So for this purpose, we need to prepare cash flow statement. Cash flow statement is not a part of accounts, but it is prepared to understand the movement or the flow of cash at a given point of time. So when we talk about cash flow statement, I'm coming to the topic. So here it is, the objectives. The objectives of cash flow statement is, first you need to find out why we should prepare the cash flow statement. We need to find a difference between different type of activities in the cash flow statement. The activities are named as operating activities, investing activities, and financing activities. We also need to prepare the cash flow statement with the help of direct and indirect method. I personally prefer using indirect method, and I will make you understand how to prepare cash flow statement. So if we start with the basic structure, the structure says that we will go with the introduction, the importance and objectives of preparing the statement, what is cash and the meaning of cash equivalent, the types of activities and their cash and their classification according to the nature of activities, how we prepare cash flow statement, and an activity is given a statement of a company, we need to summarize the cash flow of that company. We also have at the end of this chapter the keywords that is used to understand this topic. So cash flow statement, it is simple, where we find out the inflows and outflows of cash and cash equivalent over a period of time. Again, I am repeating, it is a statement which makes you understand the inflows and outflows of cash and cash equivalent over a period of time. Here a word is coming, cash equivalent. Cash equivalent means that all those items which can be readily converted into cash, all those items which can be readily converted into cash is known as cash equivalent. It can be your short term investment, it can be your marketable securities, because when you sell this investment, these securities in the market, they are quickly converted into cash. So cash is actual cash, liquid cash, and cash equivalent is any investment, any current asset which can be immediately converted into cash. The users of this information, they get substantial importance to this statement, because if we look into this statement, we try to identify different types of activities which are performed in the business. This cash flow statement is based on revised accounting standard AS3, and it is mandatory for all the listed companies to provide this statement along with your financial statements, along with your balance sheet and profit and loss account. We prepared this with the help of 2 years consecutive data. The cash flow statement is prepared not with the use of 1 year's financial data or financial statement, but for preparing the cash flow statement, we require 2 years data because it is a comparative study. If you need to find out the movement of cash, you need to find the opening balance and closing balance. So, opening balance is the gist of the previous year's transaction, and closing balance is the summary of this year's transaction. I'm not going with these features and all. I'm directly coming with how we prepare this cash flow statement. It is prepared with the use of the data which is provided in the profit and loss account, and as I said, in the balance sheet, and few additional informations are also provided along with the informations incorporated in the balance sheet and profit and loss account. What are the objectives and benefits of cash flow statement? That you can directly go through it. It is simple. Cash equivalent, I told you, any short. Yes, please. Uh, Anyone wants to say something? No. So when we talk about cash and cash equivalent, you can see here what it. Who is disturbing? When we talk about cash equivalent is anything, any cash which comprises cash in hand and demand deposit with banks. Cash equivalent means any short term, highly liquid investments which can readily be convertible into cash amount at the time of requirement. It does not change its value. It does not change its sorry. It does not change its value means that if you know that you are going to receive 1 lakh rupees, this 1 lakh rupees is received. You are not going to change that 1 lakh rupees. But if it is in the form of debtors or any other stock, you are not sure that you are going to receive those amounts in full or final installment. Marketable securities are mostly coming under this cash and cash equivalent. Now we need to find out the cash flow. Cash flow, when we talk about, it can be inflow, it can be outflow. If we make payment, cash is going out, it is your outflow. And if we receive payment, if the cash is entering your business, it is your cash inflow. So when we talk about cash inflow and cash outflow, we need to summarize this inflow and outflow under three basic activities or categories. These activities are known as operating activities, financing activities, and the third one is investing activities. So these are the three basic categories or division of your all the activities that is operated in a business. So you can see this flow chart, types of activities, operating, investing, and financing. Now we can start with the first one, cash from operating activities. What is operating activities and how cash is determined under this operating activities? Operating activities is the main activity of the company. It starts with the production and sale of the products in the business. These activities include your routine manufacturing and selling of goods and services, and any amount, any expenditure incurred on this is your operating activities. We have two methods to find out the inflow and outflow in operating activities. They are direct method and indirect method. We will begin and we will do the determination of cash flow from operating activities with the use of indirect method. When we talk about indirect method, the calculation starts with net income that is given in your profit and loss account. The net income or net profit which is given in your profit and loss account, we are going to add back the non-cash items in this method. So when we talk about cash inflows from operating activities, what are the activities which are included in operating? They are your cash receipts from the sale of goods and by rendering of services. Cash receipts from the sale of goods and the rendering of services, and cash receipts from royalties, fees, commission, and other revenues. Cash outflow from operating activities. They are cash payment to suppliers for goods and services, cash payment to employees, cash payment on behalf of the employees, and cash payments for insurance premium, their claims, annuities, and other benefits. Non operating cash flows are clearly different from operating cash flows. Non operating cash flows are not included in operating cash flows, they are different. For example, you non-operating, if you have taken a loan and you want to repay the loan amount, or against that loan amount you are paying interest, that is not a part of your operating activity, because it is not, the transaction is not because of the sale of goods and rendering of services. Coming to the second category, cash from investing activities, we have a balance sheet, and in the balance sheet, in the right hand side, it is your assets. So any amount in the balance sheet which is invested in the assets comes under investing activity. If previous year the balance of your plant and machinery was 1 lakh and this year it is 2 lakh, it means that there is an additional purchase of assets this year. If the previous balance of your asset side is more compared to the current balance of your asset side, it means that previous year is more and this year is less. That means the value of the assets has gone down. It may be due to loss in the value, or you are using the amount for some other purpose. So when we talk about investing activities, they include land and building, machinery, furniture, etc. So these activities signify the extent to which expenditures are made for acquiring resources so that we can use them for future cash flows. You can look to the broad categories of cash flows from investing activities. It is the receipt from the sale of an intangible asset. It is receipt from the repayment of advances or loans made by the third party to us. Cash receipt from the disposal of shares, warrants, or debts. Interest received, and cash received from future contract, forward contract, trading programs, and so on. Cash outflow. Cash outflow is when you purchase a fixed asset, when you make investment in the long-term asset, when you pay advances and loans to the third party, and you make payments for forward, future, options, and swap contracts. And coming to the last category, financing activity, as investing activity is taken from the asset side, that is right hand side of your balance sheet, which shows you the asset side. Investing activities are the result of your assets which are shown in your books of accounts. Right? Next comes the financing activities. So one side it is done for investing activity, it is your asset side. When it comes to financing activities, it is your first side, that is your liabilities side. We are taking the balance sheet heads. So asset is taken for determining the investment, and for financing we are taking the liabilities side. What is financing? Financing means you are raising money for the operation of your business, for meeting the requirements of your business. So when we talk about borrowing money, it means that we are not self sufficient and we need money from other banks. So, cash flow from financing activities means that you need money and you have raised money through shares, debentures, other portfolios of shares. It may be like investing in shares, investing in debentures, receiving interest, receiving dividend. So, these all are in your financing activities. So, for financing activities, it is your liability side. Next, for investing activities, it is your asset side, and operating activities, it is basically with the profit and loss account given in the balance in the financial statement. So it is written cash proceeds. Proceeds means receiving. Cash proceeds from issuing shares or other similar instruments. It can be debentures. Then cash proceeds, that is cash receiving from issuing debentures, loan, bonds, and other short or long term borrowings. Cash outflow means making the payment to the borrowed funds, payment of interest, and payment of advances, and payment of dividend. So this is the format how we prepare cash flow statement. Basic structure of the cash flow statement. It is we need to calculate the cash flow from operating activities. So cash flow from operating activities, cash flow from investing activities, and cash flow from financing activities. All these three are added. We add the closing cash balance, opening cash balance, and the result is your closing cash balance. So just go through the format, look upon it, and let me know if there is any confusion. Just 1 minute, take a breathe, and just look into the format and ponder on the points that we have discussed. Is it clear?
Yes.
Yes.
Okay, just look into the format. Is it clear? Can we move to the next?
Ma.
Yes, ma'am.
Okay.
Yes.
दादा बोला आपने इतना बात समझ जाता है, कभी मुख से भी नहीं बोला, इस बार बोला। हो सकता है बाबा
We will
से
directly
बोला
go
है।
to the indirect method. So this is indirect method. Now we know that we how to make cash flow statement. It is the total of cash flow from operating activities, cash flow from financing activities, and cash flow from investing activities. All these three activities are added. But individually, we need to find
Oh,
out
bro.
how. Yes, please.
So sorry. Does that mean that the cash flow statement consists of cash inflow and outflow?
Yeah, cash flow statement consists of cash inflow and cash outflow. So we prepare cash flow statement on the basis of three activities which is performed in the organization. It is cash flow from operating activities. When we use the word only flow, it means that it includes inflow also and outflow also. Am I clear? When we say it
Yes.
is cash flow from operating activities, it means that it is the balancing figure which is a result of all cash inflows minus cash outflow. It can be positive if the inflows are more, and it can be negative if the outflows are more compared to your cash inflow. So when we add cash inflow from operating activities, investing activities, and financing activities, for finding this, we need to individually identify the net result, the cash flow from each activity. So in order to identify cash flow from each activity, we need to find out the first one, cash flow from your operating activity. So the second and third one, that is cash flow from investment and cash flow from financing, is very easy. We need to only work on cash flow from operating activities. We are talking here about cash flow statement. So this is to be kept in mind that we are going to take the transactions which are related to cash only. We will not include those transactions which are non-cash or non-operating. So the indirect method, it takes into account the first heading as net profit for the year. This net profit for the year, it will be given to you in your profit and loss account in the financial statement. So this is your first one. I hope this you can see.
Yes, ma.
Okay, I have highlighted it. This is the first step, and this amount you are going to take from the profit and loss account in the financial statement. Then the first step is that we are going to add back all the non-cash and non-operating expenses in the balance sheet. Whichever non-cash and non-operating expenses is given in the profit and loss account, that we need to add back in order to find out the actual cash flow. So first it is depreciation, which is non-cash, goodwill written off, non-cash, provision for taxation, preliminary expenses written off, loss on sale of fixed assets. These are the items which are to be added back to the profit, existing profit of the year. And then we have to come to the minus side. Minus side means what we have to deduct: all non-cash and non-operating incomes. Adding is not operating expenditures and minus is non-operating incomes. So it is loss on sale of fixed assets, investments, etc. After this, we need to make adjustment with increase in current liabilities, decrease in current assets, increase in current assets, income tax paid, and decrease in current liabilities. Increase in current liabilities is added. This plus sign means add, minus means less. Add and less from the net profit, that is from the first or initial balance. The result that you get, it is your cash flow from operating activities. So here you get the cash flow from operating activities. Next comes cash flow from investing activities and cash flow from financing activities. So for financing and investing, only 2 or 3 entries we make. All the, if we talk about investing, in investment, all the transactions for which we make payments. Investment means your asset. So any purchase of asset is your outflow, because when you purchase asset, you have to make the payment. Or any sale of the asset, disposal of the asset is your inflow. In investment activities, against our investment, we may receive interest, we may receive dividend. So both of this, interest received and dividend received, is again your cash inflow. Coming to the financing, as you have seen, the investment activity, it is the summary of your asset side. Same way in financing activities, all the amounts that comes in the business against the raising of funds from the market. It may be from loan, it may be from share, it may be from debentures. If money is coming in the business, it is your inflow, and if money is going out of the business, it is your outflow. Next, plus minus, you need to add them, and then from in the net result, you add your closing balance of cash. The result is your cash flow from operating, investing, and financing activities. Opening cash flow, cash balance is added, and the result is your closing cash balance. Okay? Whatever adjustment is given in the question, that has to be entered twice. Otherwise, all the other entries are made in single. So all the questions are given. You just give it a try. Otherwise, we cannot understand. We need to do them practically. This is an activity given, a cash flow statement of NTPC Limited, and they have asked you people to prepare the cash flow statement of this company. The keywords, the important words, the important terminologies that is to be remembered in this chapter is cash from operation, cash equivalent, cash flow, and cash flow statement. We also need to identify the operating activities, investing activities, and financing activities. Operating activities is related to the sale and purchase. Investing activities is related to the asset side, and financing activities is related to the composition of your liabilities in the liability side. So go with the assessment questions. You will understand. Am I clear till this? Just try to understand, look back into your content, and then we will start with the second block. Any term, anything which you find difficult, which is not understandable? Yeah, it's clear.
Yes, ma'am. We come full
You're,
speed.
you're finding it difficult? See, unless and until you go through the content, my class is not going to help you out. You have to read the content that is with you. And this is a counseling session. So if you don't come out with your queries, with your doubts, with your understanding, how can I understand? I hope you are getting what I mean to say.
Okay, madam. We are with you.
Yeah, please carry on what you are saying.
Can continue. Okay.
Okay. Because I am done with the first block. Okay. So in that case, I'm starting with the second block. The second block, it is your cost accounting. When we talk about cost, cost means cost accounting deals with your production. Costing is your production, which includes raw materials, inventory, how you produce the goods, what are the inputs for production, how you determine the cost of production so that profit can be added and sales price can be determined. So block 2, it is all about your cost accounting, cost related with the manufacturing of the product. So we need to understand how the costs are classified. There are different type of cost, and how this cost is classified. We need to find out the process for determination of cost under each classification, and we need to find that on the basis of classifying the cost, what are the techniques which can be useful for the management to take strategic managerial decisions. So what is cost accounting? Cost accounting is considered as the technique to ascertain the cost of products or services on the basis of historical data. Historical data is the purchase price. So we need to find cost accounting because it is considered a technique for cost control. If the cost of production is more for a product, we need to immediately put a check on the process of its manufacturing, because the product which was supposed to be completed within a period of 15 days, it is taking more than 1 month, or a product whose cost of production was maximum ascertained to be rupees 100, now it is coming to rupees 120, 130, 150, or just the double. So what is the mechanism between this cost accounting? We need to find out the ascertaining the cost, we need to control the cost, and in context to control the cost, we need to reduce the cost. So what are the elements which are included in the cost? It is material. Material may be direct material, it may be indirect material. Direct material is your raw material, and indirect material is your labor, your capital, your land, and so on. So this is the cost flow chart. Direct are material, labor, and expenditures which are directly associated with manufacturing. And then we have in all the categories direct and indirect. If it is related to manufacturing, it is direct. If it is related to the office in general, after production, it is your indirect. Overheads means the additional expenditures. Overheads means the additional expenditures. It includes indirect material, indirect labor, and indirect expense. We have factory overhead, all the expenditures under different heads. When it is incurred in the factory, it becomes factory overhead. When the expenditures are made in the office and in the administrative block, it is known as office and administrative overheads. When the expenditure is made for sales and distribution, it is known as selling and distribution overhead. So again, this is the flow chart: overheads, factory overhead, office and administration overhead, and selling and distribution overhead. So we have three types of overhead, and when it is factory overhead, it is indirect material, indirect labor, and indirect expense. In office and administration overhead, it is indirect material, indirect labor, and indirect expenses. And third, it is selling and distribution overheads. We need to total the cost and find what is the total cost which it is costing to the company. So when we need to find the total cost, we need to find the components or constituents of your cost. So when it comes to first prime cost, it is the basic cost, then factory cost. After adding the factory overheads in prime cost, it becomes factory cost. When we add office overhead in the factory cost, it becomes office cost. And when all the other miscellaneous expenditures are added in the office cost, it becomes your total cost. Is cost clear? We find out prime cost, in that we add work overhead, that is factory overhead. Then it is your administrative overhead, and then it is your selling and distribution overhead. These are the components of your total cost. Now, with the help of all these components, we prepare cost sheet. Cost sheet means that we take into account all the cost unit wise and then find that what is the total cost. Cost sheet is a statement. Next, these are all different types of cost. These are the keywords. Just go through the once you read these keywords, which is there on your screen, because these are going to be helpful. You help in your whole unit. These are the basic terms which are used in determination of cost per unit. You go through these keywords, just read them. Is it clear?
Yeah.
You all are listening to me?
Yes, ma'am, it's clear.
Yes. Yes.
Yes, Bora, can you be a little loud?
Yes, ma'am.
Okay. I hope everyone has written your name for attendance in the chat box. I just forgot in the beginning.
Yes, ma'am.
Okay, please do not
Ma'am,
miss your attendance.
yesterday, Dr. Smriti said we should mark our presence on the LMS portal as well. How do we do that, please?
On LMS portal?
Yeah.
Okay, I will ask ma'am. You have received one LMS ID password?
Yeah.
And now you go through that and see if attendance is there.
Okay.
Okay. Otherwise, I will
Okay, ma'am.
ask Smriti ma'am and let you know.
Okay, ma'am.
Actually, this conversation is recorded. This session is recorded. So even if you miss now from your ID, we can make it out. But at times, the ID which is seen on the screen, it may not be the same with matching your name. So we need to know the registered, your original name, which is registered with the MIS portal. Have you gone through this variable cost, uncontrollable cost, opportunity cost? Just read them, because this first chapter of second unit, it is done. Please go with the self-assessments
Okay, ma'am.
questions whenever you get time. Actually, this is only the base of your understanding. Okay, if it is done, then we are moving to the next one. Chapter 7, it is absorption and marginal costing. These are the two types of costing, how to record this absorption and marginal costing. If we start with absorption costing is termed as traditional or full cost method. It means in this method, the cost of a product is determined on the basis of its, say, when we talk about this absorption costing, under this method, the cost of a product, you can find it out after taking into account both fixed and variable cost. Fixed cost never changes with the change in the units of production, but variable cost keeps on changing with the change in units of production. So fixed cost and variable cost, when they are brought together, they are going to help you in finding the absorption cost. The variable costs are those where direct material, direct labor are used, and fixed costs are those where we do not go with the change in the inputs. So when we take into account the absorption costing, all costs are identified with the manufactured products, and this will be clear with this illustration that how you take absorption costing. Suppose a manufacturing company is there with three products. The products are product A, product B, and product C. The material, labor, selling price, and output in units for these three products are given. The total overheads, the total expenditure are 12,000, out of which 9,000 is fixed and the rest are variable. That means out of 12,000, if 9,000 is fixed, the balance 3,000 is variable. It is decided to apportion the cost over different products in the ratio of output. So you need to find out the distribution of this cost on the basis of output in units. And we would prepare a statement so that we can show how the cost and profit of each product is according to the absorption unit. Absorption means how much you are absorbing. So if you see there, here it is A, B, and C. The first one is A, direct material 3, 4, and 5. What is this direct material 3, 4, and 5? If you come to the question, you see direct material is 3 rupees, 4 rupees, and 5 rupees. So these are the amount per unit. So you have 1,000 units. When you multiply 1,000 with 3, 1,000 with 4, and 1,000 to 5, you get the amount as 3,000, 4,000, and 5,000. So per unit rupees is given and total unit is given. So when you multiply per unit with total unit, you get total amount. So you have direct material, direct labor, and selling price. Direct labor and direct material 3 and 2 is taken into account. Now overheads. We need to, along with direct material and direct labor, we also need to allocate the overhead. Overhead is an expenditure. So it is 9,000 and 3,000. And 1,000 is the output. So 9,000 divided by 3 units. So per unit it is 3,000. And when the balance 3,000 is divided by 3 units, so per unit it is 1,000. So you can see fixed overhead 3,000, 1,000, 3,000, 1,000, and 3,000, 1,000. When you add them, you get the total cost. Total cost 3 plus 2 plus 3 plus 1, it is 9,000. You have selling price rupees 10 per unit. So 10 into multiplied by 1,000, that means your selling amount is 10,000 and your total cost is 9,000. So when you subtract selling price, total cost from your selling price, the balance is your profit. How to find the profit? Selling price minus total cost. So for A unit, your profit is 1,000. For B, it is 4,000. And for C, it is 7,000. So what is your total profit? If you combine all the 3 units, it is 1,000, 4,000, and 7,000. That means it is 12,000. Am I clear this?
Could you please go through this again?
Yeah. Here it is. What you want to ask, please? Please go
I'm
ahead.
saying, could you go through the calculations again?
Calculations. Chipulu Matsto. Chipulu
madam?
Matsto. What you are asking, I'm not getting you. How you
Right,
pronounce
I was
your name?
saying,
First you tell me how you pronounce your name.
name is Chipulumutso.
Chipulu Mutso. Okay. So Chipulu Mutso, please let me know what you are asking.
I was asking if you could go through it again.
The same question you need to explain me again. Am I audible to you, Chipulu Mutso?
Yes, you are.
Okay. I'm just explaining it. When we talk about absorption cost is the total cost including variable and fixed. In the question, you have been given direct material, the amount 3, 4, and 5, which is given under A, B, and C. It is rate per unit. So it is 1 unit rate is 3. If you need to find the rate of 1,000 units, then in that case, you have to multiply 1,000 with rupees 3. So your total amount of direct material will be 3,000 for A unit. Then 4 rupees multiplied by 1,000, it is 4,000 for B unit. And for C unit, it is 5,000. Next comes direct labor. Direct labor also 2 rupees, 3 rupees, and 4 rupees is the unit. Per unit cost, you multiply it with the total output, that is 1,000 units. So the total amount when you multiply the units with your 1 unit price, that is 2,000, 5,000, and 4,000. Next, they are giving that there is an overhead. There is an additional expenditure of rupees 12,000. Out of this 12,000, 9,000 is your out of this 12,000, 9,000 is your fixed expenditure, and balance 12,000 minus 9,000. This 9,000 minus 12,000, 3,000. It is your variable expenditure. So we know that the total expenditure for all the three units is 9,000. So what is the expenditure allocated to one unit? It is 9,000 divided by 3. So per unit it is 3,000. And when it is variable total 3, you divide it by 3. So per unit cost it is 1,000. Now you add all the components, all the expenditure under each unit. So for when you add the total for first, that is A unit, it comes to, see here. What is the total? The total is 9,000, 11,000 and 13,000. Okay? 9,000, 11,000 and 13,000. Now you have been given sales per unit. Total selling price is given 10,000, 15,000 and 20,000. The sales 1,000 and 9,000. If you come back to the question, you have been given selling price 10 rupees per unit and 1,000 is the unit. So 1,000 multiplied by 10, 10,000, 1,000 multiplied by 15, 15,000 and 1,000 multiplied by 20, it is 20,000. So this 10,000, 15,000 and 20,000 is your total selling price. Now you have total selling price. When you subtract selling price from your total cost, the balance is your profit, and this profit we need to ascertain. So your profit is 1,000, 4,000 and 7,000, which you can easily see. It is reflected on your screen. I'm just highlighting it with pink color, the profits. Is it visible now?
Yes, it is.
Okay, so Chipukulo Matso, did you understood?
Yes, I have now. Thank you.
Okay, so again, the question is in your screen. Whatever I have explained, I'm just minimizing the size so that it can be in one. Okay. Okay, now the question and solution both are visible on the same screen. Just go through it and try to understand. Just go through it. Just let me know once it is done from your end. You should keep a copy and a register and a pen with you. Just calculate the calculations.
Hello, Professor.
Yes, please.
My question again is on the total fixed cost, which is 9,000. I
Yeah.
understand what you did there. Yeah. For product A, what you did is you multiplied 3.
No, it's not
By
right.
1.
Fixed. No, please. Now, when it is fixed cost, fixed cost never changes with the output. Whether the production is 1,000, 2,000, 3,000, the fixed cost remains the same. So it is total 9,000 and it has to be distributed amongst 3 units. The 3 units are A, B, and C units. So total 9,000 divided by 3,000. So each individual unit expenditure in fixed cost is rupees 3,000. Am I clear? The cost is divided by number of units. 3 units are there, 3 companies are there. There are 3 products, A, B, and C. So for each product, the fixed cost total 9,000 is distributed amongst 3 products. So each product's fixed expenditure is 3,000. Am I clear, Chipulu Mutso?
Yes, at this point you're clear. Yes.
Okay. I would highly appreciate if others also put your query and do the calculations. It is very, very necessary that you should have your register and pen with you so that you can understand the calculations. Yes, Musa,
No, you are clear, ma. I'm clear, ma.
you are clear? And
Yes, ma.
there are 2 Musa. One is Musa Umar and another one is Musa Mahmood.
Musa Umar is clear.
Musa Umar is clear. And Musa Mahmood? Musa, you need to unmute. I can see you want to speak something, but you are muted. No, Musa Umar, no. Musa Mahmood. Unmute your mic and then speak. No, you have not unmuted. You unmute your mic. Click on the mic icon. Yes, now it's clear. What you want to say?
I don't have any question, ma. I just joined the
Okay.
class lately.
You joined just now? You are working?
Yeah.
You are a student or you are working?
Student,
You are from which country?
Nigeria.
You are from Nigeria. Okay.
Yeah.
Please, madam, I want to know where
Yes, Bora?
the profit amount come from.
Profit amount comes from, you can see total cost and you can see the last one, selling price. So selling price minus total cost, the balancing amount which is highlighted with pink color is your profit.
Okay.
Very nice. At least you people are getting what I'm saying.
Ma'am, and what about the variables? How do we get it?
Variables? Which variable you are
Yes.
talking about, Isha?
The variables, I saw 1,000 each.
That is variable, okay, variable cost. That 1000 each, if you go with the first line which is written, after you can see in the question, it is written as output in units, 1000, 1000, 1000. And below that, when we come with the content part, it is written that the total overheads is 12,000, out of which 9,000 is fixed. Am I clear? Did you find this line?
Yes, ma'am.
Yes.
Yes, ma'am.
Okay, so out of 12,000, 9,000 is fixed and the rest are variable. So if you minus 12,000 minus 9,000, the balance is 3,000. Again, you divide this 3,000 amongst 3 products. So each product is going to get a variable of rupees 1,000.
Very clear, ma'am. Thanks.
It's clear now. Thank you.
Very
Thanks.
good.
Thanks, ma'am. Mm.
Always welcome. Always feel free to ask. So it's done. Coming to the next. This all you need to calculate. Please go with the illustrations, and if you come across any doubt, we can have the clarification. The next one is marginal costing. So what is absorption costing? What is the takeaway? Absorption costing is the total of fixed expenses, fixed cost plus variable cost. What is marginal absorption costing? Absorption costing is total of fixed cost plus variable cost. Will you remember this line? Will you remember what is absorption costing so that we can move to the marginal costing?
Yes.
Yes, ma'am.
Okay. So when we start with marginal costing is slightly different from your absorption costing. In marginal costing, we take into account only the variable cost. In marginal costing, in this technique, only the variable costs are taken into account while calculating the cost of the product. The fixed costs are charged against the revenue of the period. Revenue comes from sales. So when we talk about fixed cost, it is calculated from the sales of the company. The revenue arising from excess sales over variable cost is technically known as contribution under marginal costing. So when it is sales minus variable cost, sales, the word is S, and variable cost, the word is VC. So when it is sales minus variable cost, it is your contribution. So if someone asks you what is contribution, contribution is the excess of sales over variable cost. The formula is like this: S minus VC. The answer is contribution. Am I clear?
Yes, ma'am.
Yes, ma'am.
Okay.
Yes.
So here it is a statement of profit which is reflected on your screen. Oh, sorry. So according to marginal costing technique, you have been given a product A and you have given a product B and product C. I'm just highlighting it so that you can easily get what we are doing. Okay, so we are doing this one. Product A, product B, and product C. Under product A, we have per unit cost, Per unit cost means cost for one product, and total cost means cost for all the products under that particular category. We have product B and we have product C. So under product, this is the continuation of your previous question. Okay, the previous question only, we are going to understand this. Direct material was 3000. We are doing it product wise. For product A, direct material was 3000. Direct labor was 2000. And as I said, we do not take fixed cost. So fixed cost, if you remember, 9,000 divided by 3, it was 3,000. We are omitting fixed cost. We are only taking variable cost, that is 1,000. So 3,000 is direct material, 2,000 is direct labor, and 1,000 is variable cost. So what is the total marginal cost? Total marginal cost is the total of all these three. That is 3,000 plus 2,000 plus 1,000. So 6,000 is your marginal cost. How to find contribution? Contribution is sales minus variable cost. Marginal cost, what it is? 6,000. So selling price is 10,000 and your marginal cost is 6,000. So 10,000 minus marginal cost 6,000. The balance is 4,000. This is the balancing figure, okay? So I'm highlighting it here. This contribution, this is the balancing figure. So when I say it is the balancing figure, it means that this is the difference. Balancing means it is the difference. So difference means it is the contribution. How you get this? 10,000 was your sales and total marginal cost is 6,000. So when you subtract 10,000 from 6,000, 4,000, it is your contribution. The next one, 15,000 minus 8,000, 7,000 is your contribution, and 20,000 minus 10,000, 10,000 is your contribution. So if you want to know the total contribution of all these three products, then we need to add. We need to add 4,000 plus 7,000 plus 10,000. So the total contribution from the three products is 21,000, and the profit you can find like this. I told you fixed cost is taken for revenue. So 21,000 is your total contribution. Fixed cost is 9,000. So you subtract 9,000 from your total contribution. The balance 12,000 is your profit. Am I clear? So marginal costing helps us in managerial decision making, as we can see from this following example. Total contribution 20,000, which we got it from adding the contribution of all the three products. 10 plus 7 plus 4,000. It is 21,000. Usme minus you deduct, you subtract 9,000. So the balance 21 minus 9,000, it is 12,000, and 12,000 is your profit.
Okay.
Okay, now again you go, yeah.
Please, ma, how did you get the 9,000 for the fixed cost?
9,000 was in the previous question. Now we are following the same question. In the previous question, it was given that out of 12,000, 9,000 is fixed cost. It will be provided in the question that what is the amount of fixed cost.
Okay.
Am I clear, Samsuddin?
Yes, yes.
So again, I request you, the question is in front of you. Just go through it, go through the calculations quickly and just make yourself understand. Any doubt? Just let me know if you have any doubt or you are calculating.
Yes, we are going through, ma.
Okay, please go through it.
It is clear, ma'am.
Okay, Isha, let others also respond. They are going through it.
It's clear.
Great. So can we move to the next if it is done?
Yes, please.
Okay.
Yes, ma'am.
So this is absorption costing and marginal costing differences. And now we are coming to the last unit of second block, last chapter, that is activity-based costing. Activity-based costing means that this activity-based costing is known as ABC costing. So let's start what it is. So activity-based costing, it is a system of costing where costs are first traced to activities and then to products. That which type of activity the cost is associated with, and then it is transferred to, and that activity is related to which product. This costing system works with an assumption that activities are responsible for the costs that are incurred as stated, and we need to identify them as per their origin. What are the features of activity-based costing? That allocation of indirect cost is done. The costs are allocated to each activity as per the resources are consumed by that activity. It is a conventional costing. It is a old form, traditional form of costing. We need to do it with certain formulas. So how it is done? This is the process of activity-based costing. First, we need to trace the cost to activities. Then it is tracing the activities to products. The stages of ABC costing are: stage 1, you need to trace the cost for each activity, and then we need to trace the activity for which, or trace the products for which the activity is performed. For the steps which is involved in this ABC's costing are identification of organizational activities and manufacturing process. Next, it is classified the factors which will determine the cost of an activity, and the factors which will decide the cost of an activity, they are known as cost drivers. Identify the cost of each activity. When we identify the cost of each activity, they are known as cost pools, and then we charge the cost to the products. How to identify? Identification of the organizational activities and manufacturing process. For this, we need to determine the number of stages involved in that process. The activities involved in producing the product or service can be identified. So, activity-based costing believes that activities cause cost. The larger is the activity, the more time the activity is to take, more cost is going to be involved. We need to identify the factors that will determine the cost of an activity, and these factors are known as cost drivers. And then cost pool, and then we need to charge them. Suppose a budgeted overhead cost driver volume of DSS Limited is given. Cost pool, budgeted overhead. Cost pool is the factors, and budgeted overheads are the amount. Cost driver and the volume of each cost driver. So material required is 10,80,000, and the number of orders which is given for this 10,80,000 is 1,300. For material handling, it is 3,50,000. And how many times this movement is there for material handling? It is 780 times. Machinery, it is 8,40,000. Number of machines in hours, it is 34,000. Maintenance hours, quality control, number of inspections, and setup, number of setups. So this is the budgeted overheads given. Now, the company produces 2450 components of A1. Company produces 2450 components of A1. Its material cost was rupees 1,50,000 and the labor cost is 2,55,000. That means to produce 2450 components, The material cost is rupees 1,50,000 and the labor cost is rupees 2,55,000. The usage activities are material orders are 9, maintenance hours are 680, material handling is 21, quality control inspection is done for 31 times, and how many quality control setups are there? It is 22. Machine hours are 1950. You need to calculate the cost driver rates and ascertain the cost of batch of components. So cost drivers are given and we need to find the calculation. So material procurement is, you have seen 10,80,000 and this 10,80,000 is for 1,300 units. If you go back to the question, I'm coming back to the question, you see here. Here, can you see? Sorry. I don't know what happened. Okay. So can you see here this? Number of orders is 1,300 and material procurement is 10,80,000. So if you come back to the question, 10,80,000 divided by 1,300. So the amount is 831 per unit. Material handling was 3,50,000 divided by 780, 448. Setup cost 4,80,000 and how many setups are there? 620. If you divide, you get the cost for each individual types. Now, when you want to find out this for a batch of 2600, then how you are going to do this? Material cost is given as 1,50,000. Labor cost here it is given as 2,55,000. Prime cost, the total of 150. $150 plus 2,55,000 is your prime cost, 4,05,000. Then we need to add overheads. Overheads, how you are going to add? You have taken this 831 and this time it is 29. So you multiply the amounts which you have calculated with the present which is given in the question. So the total cost of all overheads are added to prime cost. You get 5,97,665. When you group them, these are the groupings and these are the cost drivers. So I'm coming back to the question. You see the question and try to understand. This content you also have. You keep on scrolling and just go through this question and let me know. You practice this. This will take time, at least 5 to 10 minutes. This one question is enough for you to practice. Just go through it. This is the last unit or you can say chapter of your block 2. Keep your calculators. Okay. See from here, computation of cost drivers. From here, you are getting the per unit cost and this per unit cost is multiplied with the given question. Use your calculators. Do not go with oral calculation. I hope you are calculating this. Yes, Farida, you want to say something?
No, ma'am.
Okay, please calculate. I can see you are calculating. Bora,
No, it's okay.
okay, please carry on. Chipulumutso, Chipulumutso, can I call
Yes,
you
ma'am.
Masumba? It's a very big name.
That's fine.
I doubt I
Yeah,
will
I know.
sometimes mispronounce.
Yes.
What does this mean, Chipulumatsu?
Salvation.
Some?
Salvation, to be saved.
Okay. Good.
Oh, okay. Could you please scroll down to the other
Okay,
part?
I'm scrolling down. Just wait. Yeah. So I'm just going through the key terms which you are going through while calculating the cost drivers and ascertaining the cost drivers and cost poolers. The key terms, I will just explain them so that when you go with the content, it is not very difficult. The first one which you come is cost object. It is an item, any product or a job for which cost measurement is required. It may be material, it may be labor, and so on. So what is cost object? It is an item, any product or a job for which cost measurement is required. Next, it is cost driver. Cost drivers they form the basis of the allocation used to apply cost to services or procedures. Like if you say, today I have read a book. So what will be the cost driver for that? Either you can say in how many hours you have read a book, for how many hours, or you can also say that how many pages you have read in a book. So the number of pages or the number of hours on the basis of which you can identify your job, your cost, that is your cost driver. Unit level cost. Drivers generate unit level cost. When you find the total cost and then divide it, the result is your per unit cost. They are triggered by making or attainment of a single unit of product or services, and then it can be multiplied with numbers. What is product level cost? Cost that is caused by the growth, manufacturing, or attainment of different items. It is consist of cost like equipment, maintenance, product development. What is batch level cost? Batch level means a set. You are required to produce a particular set of products for a given point. It is not a single product, it is a batch of products. Then facility level cost. Facility level activities are taken to upload the overall operation of a business facility. These costs are organizational in nature. What facilities are available for each level of activities? We have done what is cost pool. Cost pool means cost allocation which is done from the cost pool. A cost pool is an alliance. It is a venture of individual cost for a product or service. ABM, it focuses on management of activities. ABM is activities-based management, you can say. Then comes ABB. It is the organization activities based for organizations. So this is all the terms that are going to be used. There are few questions which are self-assessment questions. It is theory also, and there are practicals also for the same. So try to go through it. The practicals may be slightly difficult. So for this chapter in this particular block, you can go confidently with the theory part. And for first two chapters, which is easy in calculation, you can go with the practicals. This way you can balance the difficult one and the tough one. I hope you are getting what I'm saying.
Yes, ma'am.
Yes, ma'am.
For this chapter, in the second block, you can always prefer going with the theories because there is a slight.
Yes, ma'am.
But for the first two chapters, which we have done, absorption costing, marginal costing, contribution, variables, fixed cost, there you can go with the calculations. And for this particular chapter, I think theory will suffice or it will balance. See, you can go with the limitations. There are so many limitations. This activity-based requires ample investment of money and time, and we need trained professionals to go with activity-based costing. This is specifically, it is not for management students. Costing is done at the factory level and it is done by the cost accountants. Okay, there are chartered accountants people who are specifically professionally trained for activity-based costing. So this requires trained professionals, and When we talk about activity based costing, when huge amounts, huge investment, huge money, labor, material is involved, the small organizations may do not prefer having activity based costing. Activity based costing further requires support from top management, otherwise, the process cannot be completed efficiently. The top management may not like to share all the details, so there may be an interruption. ABC being a bit complex, we do understand that it is a complex and it requires the compilation of a number of records and complex calculations. It is mentioned earlier also that it is only suitable for large organizations and it is some old or traditional cost accounting method, and it is more favorable. It cannot be favorable because it lacks in simplicity. The cost determination may not be easy as single cost supports several activities. So there are various limitations in this. So what is the summary? The summary is that it is a traditional based costing. Big organizations cannot afford to have ABC costing. It is not useful for small, um, you can say small organizations. It relates to the cost measurement and performance of various activities. We need to relate them with the cost pullers, with the cost drivers, and sometimes how to identify. There may be a confusion that whether to convert it into hours, numbers, or something else. So there may be a very much confusion. So this is all for today from my side. If you have any doubt, you may ask. Otherwise, I hope everyone has marked your presence in the chat box. If someone has joined or someone has left initially, if there was a network issue, please let me know. So the content is very useful. So you need to come prepared before you come for the class. Because we are not using the board, chalk and board system, so that you can understand each and everything. I'm here only to facilitate you. It's a counseling session. So you please go through the contents that we are going to take up. Now, tomorrow we are going to take up the third block. So if you have, all of you have the content, or you can download it from the website of IGNOU. Go through the content, go through the third block, and then we can have a discussion tomorrow.
Okay, Pro.
Okay? I'm happy that many of you have cleared
Thank
your
you.
doubts. They were practicing with me. The calculations were done by you. Where is Grace? Today Grace has left. She didn't ask me anything. Is she there in the class? Grace, can you listen to me?
I've been in the class. I've been trying to calculate a lot of numbers.
You have calculated the things you have calculated? So it was easy for you
Can you hear me?
compared to yesterday? Yeah, I can hear you. Can you hear
At
me?
least it's yes, I can. It's making a bit more sense. I just need to be fast in applying myself.
Yeah. And secondly, you need to come prepared with the content. Once, if you just go with a thorough reading, that is more than enough. So that when we take up the things in the class, it will be more familiar. It will not sound that it is for the first time
Oh,
you are listening to it. And this is the
indeed,
earnest
indeed.
request to each and every one. If you just go through the content once, it will be of great help for us in understanding. As I said, tomorrow I'll be taking up the third block. So, third block, if you get time, just go through it. Just have a reading. It will be the extension of this costing only, cost based accounting. It will be the extension of the second unit only. Third unit is also based on cost. There are few who do not interact. They are very silent. I fail to understand whether you are understanding. Am I audible to you? You are able to listen to me. The screen is visible or not. So there are a lot of questions which comes in my mind when you do not say anything, you do not interact. Your interaction is highly appreciated. Yes, Usman? Need to say something, Usman Nasir? Usman, your voice is not clear.
It's all clear, ma.
It's all clear? Okay.
Yes, because I have some background in accounting.
Okay,
So
you
I
have a
have,
background in accounting. You are a student or you are working?
I'm working.
You are working in some accounting firm or your working profile is some related with accounting?
Yes, I'm working in accounting. I'm accounting clerk.
Okay, very
In
nice. So when we
yes.
will be coming up with the next 2-3 blocks now, like you have the financial statement analysis, how to prepare budget, what is comparative statement, what is ratio. I think that is going to help you a lot.
Yes, of course.
Okay, so please do not miss the classes.
Okay, good. Nice. Thank you.
You're working in which place?
A private organization
You're from
company,
which country?
Nigeria.
Acha, you are also from Nigeria. Okay.
Yeah.
Okay. So shall I end the class for today? See you tomorrow.
Thank you. See you tomorrow.
Okay, thank you, ma'am.
Thank
See you
you.
Thank you,
tomorrow.
everyone. Thank you. From
See you,
my
ma'am.
side,
Thank you, madam.
good night, and for
Thank you.
you all,
Thank
it's
you, ma'am.
good day, good evening.